Ladies and gentlemen, welcome to the Sobi presentation of the Q2 results. Through the call, all participants will be in listen-only mode, and afterward, there will be a question and answer session. I will now hand over to Guido, Oelkers, CEO. Please go ahead.
Yes, good afternoon, everybody. Really a pleasure to have you here at our Q2 webcast. I think with this having said, I will be joined today by Henrik Stenqvist, our CFO, and Milan Stankovic, our head of R&D. And I think, forward-looking statement as per usual. And why don't we go right into the beef of the presentation. Yeah, so basically, this is it's a difficult environment, and I understand, that we are one of we're in the first group of pharma companies presenting. And I think, therefore, I think it may be worthwhile to understand what happened actually in this environment. And I just want to refer to US data that we just got recently hold of. So basically, in the US, total prescription between end of May and beginning of June are down 6 to 12%, and these are weekly data, so they're oscillating. But I think more important is that NRXs are down 30 to 40%. And I think it's clear that telemedicine is also not as effective as the usual pharma model. So I think when you look at our milestones that we have achieved in this environment, I think they have to be seen in this in view of this. So half-year data are actually quite strong for us. We have 20% top-line growth, 20% EBITDA, adjusted EBITDA growth. We have healthy cash flows. And we have been able, to make a significant contribution to fight against COVID, and got 2 studies that we talk later on published. We completed the enrollment of 2 key studies, the 06 trial in MAS seizure and the CIT trial, which is also not understood in this environment. And we gain market share with Elocta and Alprolix. And I think this is something that we want to spend a little bit more time on because it needs to be understood, particularly when you look at our Q2 number. And we have made substantial progress with our new launches, despite the lack of face-to-face interaction, meaning Doptelet and Gamifant. And, and we are building the future. We're able to transact the license agreement for the global license of SEL-212 from Selecta. So overall, actually, we felt there was an ambitious agenda, and I think we need to understand a little bit more what are behind the headline numbers that you have all seen. Next slide, please. So these are, I think, important to note is, and the narrative has been partially given already. We have a 4% patient growth, give and take, for our hemophilia product portfolio quarter on quarter. And this in this environment where, not a lot of switches have happened. Doptelet, we talked about 52% quarter on quarter growth. Gamifant, 27% quarter on quarter. Kineret, we maintain a very solid performance with 24%. And with Synagis, because I saw a couple of comments, I think we just have to recognize that the season last year was unusually long. Hence, we had more significant sales in April, which we didn't have because, the season this year ended earlier. But we had a very successful season, as we outlined in the Q1 report. So, there's nothing down with Synagis. In fact, we are very proud of what we have achieved. Next slide, please. And here you can see, the quarter-on-quarter, let's say, development versus the half-year development. And I think, there are quite a bit of adjustment that have to be recognized when you look at it quarter-on-quarter. And, partially they are driven by, stocking effects. But, as you will see later, the consumption per patient in some countries in Europe and hemophilia have come down, for instance, and that basically has affected our results. And it's worth mentioning that Q2 in 2019 was also strong. But these effects are more smoothened when you look at it on a half-year basis. And, this is 17% growth at constant currency. At actual currency, it's actually 20% growth. And important to note is that the core business in the same period, the product business in immunology and hematology has improved considerably faster. Next slide. And this is, I think, something that we try to explain now what actually happened between, in Q2 to make the performance a little bit better understood. We had an adjustment of our inventory. Let's say that we affect, we said give and take, in the example of our Oelkers, this was 1/3 of our growth last quarter was driven by the stocking effect, and that's around between 140 to 150 million SEK. That was a stocking effect. Then we had a negative effect from the patient consumption, and this is something we didn't really have on the radar, but I just saw market data, for instance, from France, that is consistent for the entire hemophilia business, where basically patients, because they didn't want to go to the physician office, they wanted to stretch essentially their factor, and elective surgery did not happen in Q2. As a consequence, we had a negative effect that outweighed our patient growth. Now, we think that this negative effect is of a temporary nature, and we believe that this will correct itself during the second half of the year. But, you need to understand that, at the same time, we have a 21% H1 versus previous year patient growth with Elocta, and a 29% patient growth with Alprolix. And, basically, I just want to give you some sound that we have become the number one prophylaxis company in Germany in Q2, and we have not lost any market shares in hemophilia in France either. Yeah, so this gives you a little bit of a perspective that we do not have a competitive topic. In fact, we made significant progress, but when you look at the quarterly results, this is not as visible. On a half-year basis, I think there's a certain smoothening effect, but still the consumption per patient is an effect, obviously, also on a half-year basis that we think will smoothen itself out during the second half. Next slide, please. For us, the partnering with Selecta it was a fantastic move, let's say, because we get access to a very important product in chronic refractory gout, and we think that with this pegylated uricase that is powered by the ImmTOR platform, essentially it's a rapamycin platform that can be also used in gene therapy to mitigate the effects of immunogenicity. We think that we have a very unique product, and there are around 160,000 patients, and we think that this product for sure could be useful in around 10% of those patients. So it's a very significant, alone in the US, it's a very significant opportunity. We got the global rights, and we got a share in the company. So on the whole, we think it's a very strategic transaction in the immunology sector that is on target with our strategy. Next slide, please. So summarizing, this first part, we continue to make significant progress in hemophilia, even in this difficult environment. Strong progress with Doptelet, despite lack of face-to-face interaction. The Gamifant, quarter-on-quarter, strong patient growth. We'll show you some data later. Yes, there has been a price effect, and yes, there has been an effect from the lower weight of patients, but also over time, these effects will be washed out. Continued growth with Kineret, progress in R&D, as I pointed out, and portfolio expansion. So next slide. So now we go into the business review of hematology. Here you see basically for both products on a half-year basis to show the progress that we have made. But I think, important just to note is the patient growth, and I think, that we basically, are able to continue expanding our share, even though it's much more difficult in a Q2 environment to switch patients, but we were able to do so, and that basically gives us the confidence also for the rest of the year. Next slide, please. And here you can see the progress that we have made with Doptelet, actually quite substantial. And using here, let's say, units as a proxy, and that gives you a feeling, that we are actually making great strides with this product. Very, very optimistic with the product, and very gratified that despite this difficult environment, we were able to complete the enrollment of the CIT trial, and the team at Dova is doing a fantastic job. Very proud of them. Next slide, please. And then we basically want to talk about immunology. Here you have to just notice the seasonal effect of Synagis, and also the effect that we had such a fantastic season, end of the season in Q1, but it ended earlier. Hence, the Q2 comparison for Synagis is really not relevant. And let's say, with Gamifant, we are now making some progress, and maybe next slide. And here you can see basically the progress on a patient base. And, basically when you would index this, the absolute patient growth in Q2 2020 versus Q1 2020, in comparison to the progress we have made 1 year ago, is around 50% higher. So it's a significant uplift of patient population. We wish it could be faster, but you have to acknowledge that this is a significant progress, and the economics actually are more influenced by the price reduction that we established, and by the lower consumption per patient because of the lower weight. But as we're expanding the indication, we also think that we will continuously broaden the product, and the product is on a good track. Next slide, please. Kineret, is continuing to make great progress, as you can see here, and we think that this is a product that has significantly more potential, but it's a crowded environment, and it has shown now some positive effects even in a COVID-related environment. Just want to show you one slide, and then before I hand over to Milan. Next slide, please. And here you can see, one of the studies that was just recently published in May this year in severe forms of COVID. And, you see a beautiful separation of the Kaplan-Meier curve and an improvement of survival. And basically, whilst you can always argue that there are limitations to some of those studies, but, we were very happy, and this confirmed our hypothesis that anakinra can have a significant role in this area of hyperinflammation, and basically many authorities have now a positive to a neutral view, whilst other compounds have been dismissed in this treatment regime, and we have currently 2,500 patients in different trials ongoing. Some of them have the grade of phase 3. So we are looking at this quite optimistically moving in the future. And I think this is a good time now to hand over to Milan. And maybe, Milan, you can share your view on Kineret and maybe some of the data that we are generating.
Yes, thank you very much, Guido. Please turn to slide 18. So on this slide, we're showing some additional data to the data that Guido just showed. Another retrospective cohort study. This one was performed in Italy. And this was from a group of patients that had a COVID-19 infection. They had acute respiratory distress syndrome, and they also had hyperinflammation. And what we're seeing here in the group of 29 that received higher dose anakinra in comparison to the historical control of 16 patients, then first of all, anakinra reduced inflammation. It also showed improvement in respiratory function, and then also, as Guido mentioned from the previous study, also a survival benefit. So when we add up the data that has been accrued until now with anakinra, we think that these continue to support a potential benefit of anakinra in this patient population. And of course, you can say on the strength of that, we will continue to support research into this area, and we will also evaluate when there may be sufficient data, also from randomized controlled trials, whether we can engage into a dialogue with regulatory authorities around the potential benefits of anakinra here. And if we can move to slide 19, please. So as Guido already mentioned, we have announced a partnership with Selecta around treatment of patients with refractory gout. So gout is an inflammatory disease that is essentially caused by elevated levels of uric acid that subsequently leads to deposition of urate crystals. This can occur anywhere in the body, but most frequently it's seen in the joints. If sufficient crystals accumulate, then these can cause trophi that may cause pain and restricted mobility. And as shown on the right-hand side of this slide, complications of chronic gout includes joint deformities with potential disability, but these crystals may also form in the kidneys, and here they may cause obstruction and/or infection. Now, refractory gout, which is, you can say, the potential we're discussing here with 212, are patients that are not controlled on conventional therapies, and I will share a little bit more of the data on the next slide, which would then be slide 20. So it turns out that humans do not have an enzyme that can break down uric acid. So whenever you give the recombinant enzyme, this will elicit a very strong immune response in humans, and this not only causes a safety concern with infusion-related reactions, but also blunts the efficacy of the enzyme that is being infused. So the beauty of 212, as Guido mentioned, is that this is a combination of the uricase enzyme and also rapamycin nanoparticles. And these rapamycin nanoparticles, when given together with uricase enzyme, causes tolerance induction. And this is what we're illustrating on this slide, where we see 66% of evaluable patients from a phase 2 study responding with serum uric acid levels less than 6. But not only that, but also a very significant reduction in serious infusion reactions if the ImmTOR or the rapamycin nanoparticles are added to the combination. So if I can have the next slide, please, which would then be slide 21. So there is a phase 2 study ongoing comparing 212 to pegloticase. The study is now fully enrolled. There are some early data that suggest a lower withdrawal rate in the 212 arm versus pegloticase, which further supports the potential differentiation of the 212 molecule. The phase 3 program that I'm showing on the right-hand side here has been agreed with the FDA and consists of 2 pivotal trials that are planned to start later this year. And if we can move to the next slide, which would then be slide 22. Then this slide illustrates how we continue to build the R&D pipeline around our 2 core areas, being hematology and immunology. And just to give you some updates since the last time we showed this slide, we have added 212 in phase 2, expect to start phase 3 later this year. As Guido mentioned, we completed the enrollment in the chemotherapy-induced thrombocytopenia trial with avatrombopag, and we expect results in Q4 this year. We got approval of FMF in Europe with anakinra. We very recently submitted the file in the US for anakinra and Andera. The file is under validation. We plan to add additional sites in the US for the COVID-19 study in August to increase enrollment. And we also expect to initiate the phase 2 study with emapalumab in graft failure somewhere around year end. And with that, I would like to hand over to Henrik for the financial results.
Thank you, Milan, and good afternoon, everyone. So let's move to the next slide and look at the financial summary for the quarter and the first half of the year. The revenues for Q2 amounted to 3,070 million. That corresponded to a decline of 3% and 4% at CER. In Q2, as we heard, we had to pay back for some of the favorable impacts that we reported in Q1, now in the form of destocking and other negative factors such as reduced consumption impacting from COVID-19. So it's actually also relevant to reflect over the half-year situation where we see a growth of 20% or 17% at CER. As we move on from revenue, we increased our gross margin to 78% in Q2 compared to 76% in 2019. So we continue to trend positively due to various favorable product mix, but also including the diminishing share of the non-core specialty care business. We expect to see an accelerated decline in specialty care in H2 as a result of discontinued products. The COVID-19 situation with lockdowns across most markets led to a lower activity level and a lower spend in Q2. Operating expenses in Q2 of 1,344 million were in fact 75 million lower than in Q1. And as a result, adjusted EBITDA reached 1,018 million for the quarter, corresponding to a margin of 33%. So we hold the margin well because this margin reflects the seasonal weakness of Q2 relative to Q1. And as we can see, the margin year to date of 41% is in line with the same period 2019. Looking now a bit into cash flow and debt, despite the relative seasonal weakness in Q2 that I just mentioned, we have an extraordinary operating cash flow in the quarter. And this is mainly the result of a reduction in working capital following the collection of receivables from the high sales levels that we reported in Q1. And as a consequence, net debt was reduced to 11.8 billion from 14.2 billion in Q1. And if we switch to the next slide, this illustrates the net debt development over recent quarters, and it's evident that we continue to rapidly delever the company, having levered up in 2019 to finance the acquisitions of Synergies, Galifant and Dova. And from the peak in Q4 19 of 15.4 billion, we have delevered now to 11.8 in just 6 months. And this is, of course, very satisfactory, but we should also consider that Q3 and Q4 are expected to be a little less prominent in terms of cash generation due to the seasonality and the need to expand working capital, mainly because of the synergy season. The net debt of 11.8 billion corresponds to a leverage which is now down well below 2 times EBITDA on a pro forma basis, which is, of course, very comfortable. And we maintain available liquidity of more than 7 billion, despite maturities occurring during this quarter. And this position of financial strength, of course, provides us with opportunities going forward. And with that, thank you, and back to you, Guido.
Thank you, Henrik. And, maybe we go then to the summary. Next slide, please. Yeah, so basically, when you look at it, we are making progress in a number of areas. With Florio, our digital platform, we are working on, we have made significant progress, more than doubled our patients in Q2 versus what we had. The project is on a good way, and it's starting to become meaningful to a larger group of patients. We have our Thrombocap pack, with the CIT trial we talked about, ITP currently under review in Europe, and we are ready for launch in CLD, and waiting now for the right environment to launch a product in Europe. With regard to with regard to anakinra and immunology, we are now broadening the foundation. You have seen the data on anakinra, emapalumab, making at least on a quarter basis, on a patient basis, nice progress. And, with SEL-212, we think that we have a very meaningful addition to our immunology franchise, and, synergies we have talked about. And I think it's also important to note that now with portfolio, we further expand the company also geographically. We talked about, an expansion into China last it's King Q1, and now we have set up a company in Japan as well. And, we think that particularly our immunology franchise would be very relevant for those countries. Next slide. So when you basically look at the results, yes, there is some adjustments in Q2, but we are convinced, that we see very strong signals from the market, from patients, for all our products. And, we are not, for our core products, we are really not losing anything. So we are gaining share, which is very, very useful. That makes us, even in this very uncertain environment, confident to confirm our current guidance. And let's say, and think, that we can continue growing double digit our two core business areas. Core business goes well above 20%, 22 in constant currency. So, we think that we are on a good way, and the same applies for earnings. Our EBITDA guidance also remains unchanged. And we think that we want to continue building the business. At the example of Doptelet, you've seen that, there have been some question marks around the Doptelet performance, but, the percentage of 52% quarter on quarter is without the milestone. This is pure operating business, around 100 mil in Q2 and around 65 mil SEK in Q1. And then in addition, we had 87 million of a milestone payment for China. So that's really, where we stand. So, feeling quite good about performance. Maybe it's a good time now to invite questions as they may arise. Yeah, maybe we go to the question and answer session, and the operator can help us.
Thank you. If you do wish to ask a question, please press 01 on your telephone keypad. If you wish to withdraw your question, you may do so by pressing 02 to cancel. There will be a brief pause while questions are being registered. And our first question is from Yang Jeffries. The floor is yours.
Thank you very much. So I have a couple of quick questions on the clinical data timeline and then one financial question. So on CIT, I think previously you mentioned data for avatrombopag in third quarter, so it kind of slipped to 4Q. So would that be kind of only part of a 4Q? And for Kineret and Gamifant phase 3 trial for COVID-19, given the patient enrollment now, and you mentioned increasing the clinical sites, do you think we should expect the data at least before year end? And the last question is on EBITDA margin. Second quarter EBITDA margin of 33% is similar to that of last year. So should we expect the full year 2020 EBITDA margin to be similar to 2019, which was close to like 42%? Thank you.
Thank you, Ewan. Maybe I start, just priming it, and then, I can invite Milan and Henrik also to comment. Let's start maybe with regard to these COVID-related questions. As we think that we will have a continuous flow now out of these very different trials of information and data during the course of this year. And it's always a question. Some of them, let's say, will be phase 3 grade. Will this be enough to get an indication? I mean, it's not. We just make the data available. But we think with all these information and data that we collectively providing, at least there's meaningful evidence generated. And, and I think this is reflected in some of the positive views that we see around the world regarding the product, in particular in view of this very favorable safety profile. So, we will see quite a lot of data now coming in during the course of the year. Obviously, you have seen a reduction of ICU patients in Europe, but you have seen at the same time significant number of ICU patients in Europe and other parts of the world. So with this, there's sufficient patient potential. The other thing is now with the CIT trial, we are on track, exactly where we wanted to be. We will now in this quarter will basically conclude the trial. We'll then prepare submission. So we are still on track for 2021 launch. Yeah? So in the US. So I think that's. I think we're quite happy that basically this works out. And with regard to the EBITDA margin, I think you have seen this, that there was a rise, obviously, during the later part last year. I think we would rather, stay consistent with our guidance, 5.5 to 6.3, and then basically it basically is the EBITDA margin that it will be. Let's say, and then also in terms of top line, we don't want to speculate too much, but it will be, let's say, somehow in a range. And I would rather refrain from providing a more precise guidance. Maybe we start with Milan. Do you want to comment on some of the questions?
Yes. So thank you, Guido and Jürgen. So with respect to the CIT trial, I agree there's not a delay. You can say it's more like whether you get data at the end of Q3 or early Q4. So I think that one is okay. Then we have the COVID-19 study. We initially was under the impression that we would be able to enroll the study in Italy. So we have now 4 and 6 sites. With the waning pandemic, we're moving to the US. I think maybe unfortunately for the community as such, the pandemic continues. So we plan to add probably around another 10 sites in the US in order to complete enrollment of the trial. And I think it's difficult to speculate. It depends very much on how the pandemic evolves, how long time it will take to enroll the patients. And I think, I don't know, Henrik, there was a question for you also, I think.
I think you actually answered that. We don't guide on specific margin. It's a range, and it depends on where we end up in that range. So that's it.
Maybe we then open the floor to other questions. I hope you answered the question.
The next question is from Christopher Houdet, SEB. The floor is yours.
Hi there, and congrats on a solid quarter despite difficult circumstances. So the first question, the EU ITP timeline is still 2021, but why the delayed launch in CLD in the EU? Because I think at the deal announcement it was originally 2019. That's the first question. Then can you provide some detail on your expansion into Asia? I mean, particularly what products are sold directly by you there now, and what are your plans for the future with your current stable of products or on the pipeline?
Yeah.
Oh, you can start there.
I mean, yeah, perfect. Maybe we start with CLD. I mean, CLD is approved in Europe, and basically, what held us back a little bit was COVID and supply chain, and because we got a certain formulation approved, now we have everything in place, but it is very tough, in these at this moment of time to create the right level of excitement. So we think that the CLD launch will be late Q3, beginning of Q1. Yeah, Q4. Sorry, Q4. And there's nothing more to it. The product is registered, so we're eager to get into the weeds of it, and then basically beginning of 2021 we should be in a good close for ITP if everything works. In Europe, and with regard to Asia, I think it's really when you look at the number, for instance, of HLH patients in markets like China and Japan, then this is very significant. Yeah? And this prompted us to rethink geographic diversification. And for these two markets, we take ownership ourselves because we know what it takes. I've worked 18 years in this part of the world to build representations there, and we have made quick strides. We have been able to win a chair from a big pharma company who was running one of the largest companies in China. We have a very experienced team in Japan. We have a very experienced team in China now, and basically products like Gamifant, like Kineret, like Doptelet, then obviously Selecta, and also Kineret will make perfect sense for us to launch those products there and have a very significant let's say expansion of our overall global franchise. So we think that these were strategic moves, and very excited about Asia. We have already got the one or the other accolade, for instance, now in China going. So we are very optimistic. Current sales is zero. So these are pre-operational activities, but we may actually be able to record our first sales next year in China, Japan 2022.
Okay, thanks. And then a couple questions on hemophilia and cell 212. So hemophilia, in the wake of the UK tender agreement, will there be any temporary negative impact from lower pricing? And if so, when should we expect it? And then as far as hemophilia factor consumption is concerned, how much of the effect year on year was the result of lower activity on the part of patients, and how much is from fewer surgical procedures, if you know? And then for cell 212, are there any obvious potential antitrust issues that I'm missing, or do you expect this to be straightforward from an antitrust perspective at least? And then lastly, is there a scenario in which cell 212 could get accelerated approval on the basis of compare?
Mm-hmm. Yeah, I think why don't we take it one step at a time? I mean, we were listed in the UK tender. Very happy about this. The price concessions, let's say, that we have made in the UK are within a reasonable frame, and actually we enacted this already ahead of the tender. So we are very happy, with the outcome of the UK tender. With regard to the consumption versus reduction as a consequence of activity and surgical procedure, that granularity, unfortunately, we do not have. Yeah, so the consumption is more than this consumption effect in Q2 is more than 200 million. So that gives you a little bit of a flavor of where we are currently at. Sec. Yeah, and then with regard to the SEL 212, there we don't foresee, any antitrust because the launch sequence is around 2023, end of 2023, 2024. We don't think that we're not aware that we are in violation of anything. We should be able to launch this, and we are very excited. Once also we can publish the phase 2 data, let's say, about this product.
Yeah, great. And then the last one was about whether you could get accelerated approval for it on the basis of the compare trial.
No, I maybe Milan. You have a view on this? I don't think so. Maybe Milan. What is your view?
Yeah. So I think we are encouraged, you can say, by the differentiation potential of 212, also with the rapamycin tolerance induction. I think it's, to your point, Guido, I think it's too early to speculate whether that, you can say, potential clinical differentiation would translate into an accelerated approach. But we are encouraged by 212.
Okay, thank you very much. Appreciate it.
Thank you, Christopher. Appreciate it.
Our next question is from Peter Sest, Handelsbanken. The floor is yours.
Yeah, hi, it's Peter from Handelsbanken. I have a bunch of questions, but I'll just fire two away and get back in the queue. The first one on cell 212. Just wondered how we should look at the data when it comes out here in Q3, Q4, in particularly in view of the fact that the response rates seen with Krystexxa in combination with methotrexate, they are topping at 80 to 100%. I am fully aware of the issues with methotrexate, but on the other hand, every rheumatologist on the planet has probably experience with that product, whereas very few probably know rapamycin. So on top of data, some perspectives on how you see the differentiation and versus Krystexxa. Should we anticipate that Elocta and Alprolix will be back in growth mode during Q3 and Q4? Thank you. And I'll jump into the queue.
Yeah. Now, maybe we go back to we start with SEL-212. I think, we know that that basically Krystexxa has a certain group of patients. I think they've made announcements how many patients they currently have on the product, and you can read the report. So it's a fraction of the 16,000 that I just mentioned, and it is because of these of the immunogenicity that we think we can address very well. So it's not just side effects, because the product has done some let's say doesn't seem to work also in certain areas. So we think that our combination is going to be a meaningful addition, at least for a larger group of patients. And so I think and with regard to hemophilia, I mean, if you take it, if you believe that the let's say the consumption reduction is of temporary nature, which we believe, then you would assume that the product will grow again in the rest of the year, the hemophilia franchise. And so maybe Milan, you want to add some additional flavor to ImmTOR and the differentiation of Selecta SEL-212?
Absolutely, and thanks for the question. So I think, yes, you can say the rheumatologists are used to it, but rheumatologists will not be the ones that have to take the combination. And I think in this particular space with gout patients, I think methotrexate has a significant number of black box warnings across a number of different organ systems, from the bone marrow to the kidney to the liver. The dose has to be adjusted in patients that have chronic kidney disease. We know that there are also convenience issues with Krystexxa, every 2 weeks plus methotrexate plus folic acid, versus you can say a once monthly therapeutic option that covers everything. Then there is the alcohol issue and the liver toxicity with methotrexate. So while it may have achieved some acceptability in a rheumatoid arthritis space, I am less confident that you would see the same acceptability, you can say, in a refractory gout space. And I think having a combination with the tolerance induction, I think we feel quite comfortable about where we are and the potential for 212 to differentiate itself.
Just a follow-up question here. Correct me if I'm wrong, but doesn't rapamycin have a boxed warning as well?
Rapamycin also has, you can say, safety and also a box warning, but it doesn't have the systemic box warnings that you see with methotrexate, that more or less every organ system is affected. And there's even a prescription restriction on physicians having to understand methotrexate. So I think out of the two, I think rapamycin is far more benign.
But do you think you can evade the box warning on the cell?
No, I don't think the idea is to negate box warnings. I think definitely not. But I think the idea is more what is the relevance of the toxicities observed in the target population that you want to treat, and what is the likelihood that any of those safety liabilities would have a translational impact into the patient population. And here I see more of an impact of methotrexate than I see of rapamycin.
Okay, thank you. I'll jump back in the queue. Thank you very much.
Thanks.
Next question is from Emmanuel Papadakis, Barclays.
Thanks for taking the question. I'm in for Barclays. Maybe I'll take a couple. One's follow up on Elocta, really. Just if you could give us a little bit more color on the regional dynamics, particularly how France is looking. Maybe quantify for us the potential in the UK. I mean, where I'm really going with the question is, you talked about the 140 to 150 destock in Q2 and lower consumption, but for us to get anywhere close to consensus expectations this year, for the full year, for the second half, would need a pretty significant recovery. So your confidence in that and how regional dynamics might help that would be of interest. And then the second question, Guido, really is a bigger picture question around guidance. You've reaffirmed guidance this morning. We've discussed in the past, after a very strong start to the year, that it seemed like you might have room to increase guidance. Consensus expectations currently sit at the top end of your existing guidance range for both revenue and EBITDA. So your confidence in meeting that upper end and how H2 may facilitate or not scope to increase that would be of interest. Thank you.
Yeah. Oh, thank you. I mean, just maybe let's start with hemophilia. I just saw the GRS data from the first half in France, which is obviously an important market from us. And there, we basically, our consumption data mimic, the market data. We have not given in market share. In fact, we have gained patients and on a net basis. So, that actually gives us confidence that we still have a very competitive package. We have, as I mentioned earlier, we have become the number one prophylaxis product in hemophilia in Germany in Q2. So there, let's say it's also resonating. We have overall in Europe, gained significant number of patients despite the impact on face-to-face, lack of face-to-face interaction. And, and I think you have, most of you have seen these studies, where, face-to-face interaction versus the current environment has a 30 to 40% productivity difference. So just recognizing this, I think, and people have other worries than switching patients typically in COVID times. So that gives us also confidence in Europe that basically we should be back. Obviously, there is a proliferation of competition, but we hold firm on our offering. We have the Floria platform, let's say, expanding, and the product advantages we have talked about in many sessions. So we think we have a strong offering, and and with regard to the UK, I commented on. I think we are quite actually satisfied with the outcome, because we are no longer held back now in this new environment by the share of the market that we are allowed to compete in. So that gives us a good opportunity also. Well, I think obviously, when you look at hemophilia mid to long term, there will be limitations to growth. Yeah. But then we have also BIVV001 knocking at the door, which actually looks pretty good as we speak. So we think we have a significant role to play. Yeah. We don't give guidance now on a product basis, but as I alluded to earlier, it seems that we should be able to show growth in the following quarters, and therefore we see no reason to change our guidance. Whether we are now at the higher end of the guidance or not in this environment, I don't want precise our guidance. Guidance is a guidance, but we are confident that we will be in line with the guidance, and you can be rest assured that we will do everything to be at the upper end. So that's what I can tell you. But I'm not now, let's say, basically narrowing the window of the guidance. I think this would not be sound.
Thank you.
You're welcome.
Next question is from Victor Sandberg, ABG. The floor is yours.
Mm-hmm.
Hi, thank you for taking my question. So first of all, I just wondered if you could give any indication of when you're going to pay the upfront payment to Selecta for the licensing agreement. And on the same topic also, Selecta said that they see cost savings of at least $150 million with the Sobi deal. How much of that will be increased cost for you going forward? I can take those questions first and then have some follow-ups.
Yeah, I mean, with regard to the upfront payment, the upfront payment will be due upon closing, which we expect, within the next 1 or 2 months. We don't expect, any issues with the competition authorities, and then this will become due. Henrik, you want to mention more about the accounting of this and how you see this?
No, and I mean, it's absolutely right that we expect closing to occur relatively soon, and then we pay and we capitalize the upfront.
And the 150 million that Selecta can save, I think this is baked to a certain degree in our upfront as well.
Yeah. So when it
Henrik,
comes
you want to comment?
Yeah. So what we say regarding the guidance is that the guidance excludes any impact from Selecta. When we close, we indicate it's in a note there in the report that it could mean increased R&D spend of up to 150 million for the rest of this year. So
in
that
SEK,
is the short-term impact. And
in SEK, yeah?
Yeah.
Henrik,
yeah. In SEK, yes. And we will have to come back to, the longer-term impact of this development.
Okay, thank you. And staying on Selecta, for cell 212, you talked about the 66% response rate. But if you do a modified intent to treat analysis on the higher dose cohorts, 10 to 12, putting back patients that discontinued, it seems like your response is closer to 46%. Can you speak a bit how you have optimized the COMPARE trial to limit discontinuations and where you expect the response to end up? Maybe how much better do you need to be in order to be outside of the confidence interval to hit superiority for that trial? Thanks.
Milan, you want to comment?
Yeah, so I think it's difficult to compare studies across, as you correctly point out. The 66% refers to a phase 2 evaluable patient analysis, and I think even in a comparative study, the patients that you can say withdrew for non-safety related adverse events on non-withdrawal criteria would also be the same in the Krystexxa study. So the differentiation potential of 212 and Krystexxa, I think, as I said, and this was also announced by Selecta in December 2019, they have seen a numerical imbalance in the withdrawal rate and the withdrawal due to the less than 6 milligram per deciliter withdrawal criteria for uric acid. And they have seen that in favor of 212, both for the you can say stopping criteria, but also to a certain extent for adverse events. And this is why we continue to believe that 212 would be differentiated against Krystexxa. The study, the 212 study, is sufficiently powered to detect what I would say a meaningful difference between 212 and Krystexxa on sustainability of being able to lower uric acid.
Okay, thanks. And just a final question on Doptelet. Can you give any more flavor on how the launch is going in ITP, any patient numbers, prescription data that you could share? And also maybe a quick comment on Novartis that is planning to file a food effect-free formulation in 2021. How do you view that competitive threat to Doptelet? Thank you.
Yeah, thank you. I mean, the product makes very significant progress. You have seen, 52% growth, quarter on quarter. So that's very positive. And that's basically also reflected, in the number, obviously, of patients now that we have been able to increase. And I think the ITP, obviously, I mean, let's put it this, we were a little bit impacted by, like many other companies, by the lack of ability to see physicians. Yeah. And, when you look at the data from the US, from IQVIA, 30 to 40% less NRXs in this time period from end of March to beginning of June. Obviously, this was, most of the quarter. So then in the second part of June, things were coming back. Clearly had an impact on our launch. So the hope is by the opening of the economy, we will be able to accelerate the pace here again. And that's really what we have in mind. And let's say, but so we are very positive of the product. By the product, we also think that the CIT indication, remain convinced, will be a significant move for the product. So the evaluation of the product in our books has not changed, and basically, the advantages. Maybe Milan, you want to summarize, how you view the new formulation from Novartis, from Promacta. But we think that we will continue going strong, regardless.
Yeah, so I think we have also seen this. We have not seen any data, but the safety liability continues to be the same when it comes to liver toxicity. So even if there is, you can say, a blunted or a less aggressive food effect of the new formulation, which remains to be seen, the fundamental issue around the toxicity profile is unchanged. So we continue to stand by the differentiated profile of avatrombopag. I think when you look at the totality of the package that avatrombopag can provide, I think it's clearly meaningfully differentiated against any other TPO in this space.
Okay, thank you very much for taking my questions.
Thank you.
Thanks.
Next question is from Sten Gustafsson, Nordea. Floor is yours.
Hi, everyone. Thanks for taking my questions. A few. First of all, on Elocta, just to make sure I understand it, should we use the Q2 sales figure, adding back the stocking effect, and then look at some patient growth going into the second half when you talk about that you see growth opportunities for that product? That would be the first one. My second question is regards to your OpEx spending, and if you could perhaps help us with the phasing of how that will develop in the second half. And my final question is if the CIT indication is included in the $500 million sales potential you talked about in, I think it was in the Q4 presentation half a year ago. That would be helpful. Thank you.
Yeah, no, maybe we start with the CIT. I mean, we looked at the product and we gave the first guidance as a holistically, but if CIT really works well, then yeah, you can model yourself. Obviously, I mean, 70,000 patients. That basically should give you some comfort, for the guidance that we have given, on the CIT strength alone. Yeah. I mean, 70,000 patients alone in the US. Yeah. So, but this is not the time for us now to change the guidance.
Okay.
And I think that gives you a little bit of a flavor. The first
Absolutely.
question I just did. Can you repeat the first question one more time? Sorry.
Yeah, that was when you talk about Elocta growth for the second half, should we add back the stocking effect? You said 150 million to the Q2 number and look at growth from that level. Is that representing?
Yeah, I think what basically the stocking effect is really something that we had in Q1, now is in Q2. So that basically increases your base for Q2, and then you have basically you will have patient growth that will drive ultimately sales growth. And then the question is only, will you still have an overhang, a little bit of consumption saving because the people are still affected by COVID, and in terms of, I think elective surgery will be a little bit down also in the second half of the year. I mean, we heard that, in Q4 that should normalize, but the main driver is probably that, patients now get back into the right regime, and there we are working with physicians as well as the patient associations to make sure that patients don't underdose and are enjoying the full protection. So there should be an offsetting effect, in the second half of this year. Yeah. And let's say in this regard to OPEX, we have, one of the main drivers of the OPEX is going to be some of the studies that we are undertaking, that we are now ramping up, like Gamifant 010, like the acute graft failure study, and this is impacting OPEX, and obviously we want to remain competitive launches in Europe for CLD and the pre-launch or end launch, and hopefully depending on how it falls for ITP, and that basically has to be seen as main factors. Maybe Henrik, you want to comment to give it more of a flavor.
Yeah, we do expect a generally higher activity level in H2 than we've seen in H1. It's not like we think COVID is over, but we do expect an easier environment to operate in. And in addition to what you said, Guido, we also continue the international work, including not only China and Japan, but also Russia, preparing for the future launch of Elocta.
All right, thank you.
That answers your question?
Yeah. Yes, but is it fair to assume that it will be more Q4 than Q3, or do you, now in Q2 we saw OPEX coming down, so it would, do you expect it, when do you expect it to increase, basically?
Over the full half year, but obviously Q4 is a much higher activity level quarter than Q3 in general. So more in Q4 than in Q3, obviously.
All right. Yep, that makes sense. Thank you.
Thank you.
Next question is from Christopher Uhde, SEB.
Hi. Yeah, I just had a couple of quick follow-ups. So I guess the manufacturing revenue, 2 consecutive quarters of quite high performance. Should we be expecting that to drop back down, or is this the new normal? And the last question I have was this type 2 variation submission. Is this? I'm a bit confused because I thought that was basically like a reformulation. Is this an SNDA or a type of thing equivalent for Europe, or why bring it up if there are no new safety findings?
Okay. Maybe we start with the safety findings. Milan, you want to comment on this? This is a new formulation.
Which application are you thinking of, Christoph?
Sorry?
Which variation application are you thinking of?
It was the Kineret for or is it? It was the one referred to in the report. Yeah, for the Sobi.Anakin 302 in stills.
That's a very. I mean, I need to come back to you on that. Sorry.
Okay, thanks.
Yeah, it's not really the mainstream. As regards manufacturing income, I mean, this is a relatively stable business, yeah. So, the growth that you see now, I mean, and we are here following, obviously, Pfizer's lead. So I think, if you want to know over the longer run how our manufacturing revenues are performing, you just look at the forecast for ReFacto.
Okay, thanks.
Appreciate it. Thanks.
And our last question is from Peter Sest, Handelsbanken.
Yeah, it's Peter again. Thanks for taking my follow-up. And they were actually related to costs related to SEL-212. If you look at Selecta in 2019, they reported SEL-212 related costs, R&D costs of roughly $26 million. That is roughly, let's say, 260 SEK, and that is just for these smaller studies. Assuming a larger phase 3 study to be initiated this year and rolling into 2021, perhaps 22. I mean, it would be, just a doubling of these costs sounds sort of, in the lower end of what we should expect in terms of additional costs for 21, 22. Is that sort of the right calculation / way to look at it? And I just want to get back to Elocta and the competitive landscape in France. I think one thing that sort of spooks the market a bit is that you talk about additional patient growth across the board, but in France you specifically just mentioned that you are maintaining your market leadership, which basically could assume that you are maintaining the leadership in the replacement factor segment, but that the overall market share of that segment is going down. So my question very specifically, have you seen patient switches out of Elocta and into other products during Q2 in France? Thank you.
Maybe Henrik, you want to talk about it?
Yeah, I think Peter, I don't contradict you when you say what you say about the cost for the phase 3 trial, but I think it's fair that we come back with a firmer opinion once we've actually closed the transaction.
Okay. And then on Elocta and switches out of Elocta in France, if you've seen any of that during Q2.
Actually, to be honest, we had a net patient gain. There were many. In fact, there may be 2 or 3 switches from Elocta, but this was overcompensated by the gains. Yeah, so we are still going strong. Yeah, it's the over number of switches to Hemlibra is minimal for us.
Okay. Thank you.
You're welcome.
And we have no more further question. I give this floor back to you for the final remark.
Yeah. Thank you so much for your interest and apologies if some of the questions were not sufficiently answered or we were not broad enough. But at least you can see there's quite a bit of robustness in this business, and in Q2 it deserves a bit of a second look. Some additional comments. But as hopefully we have communicated, we think actually these are solid results and further building the future. Thank you so much for your interest and wish you a great day. Talk to you soon. Bye.
This is now concludes our conference call. Thank you for attending. You may now disconnect your line.
Thanks.